Welcome to another exciting episode of Slash and Taxes. Today we're going to talk about overtime pay, overtime pay. And now Uncle Sam says no tax on it? That's right, baby. Your late night grind's going to make a little bit more money in your pocket than before, because Uncle Sam's not going to be sticking that hand in that pocket. Kind of like that game show on TV. Remember, stick your hand in that $100 pocket. How did he get away with that? Every time I tried, the lawyers always got involved. But hold on, stop the tour bus. Not everybody gets to ride this gravy train, unfortunately. Well, first of all, let's get a little woodshed and a little playing up and down our scales for hours out of the way. We're going to do this really quick, though. What is overtime pay? Well, Section 7 of the Fair Labor Standards Act that came out in 1938, before most of our times, requires that you get paid at least time and a half if you work more than 40 hours a week. Now, there are some exempt positions that don't qualify for overtime, mostly salaried people. Here's a few examples. Example number 1, your CPA. Poor fella, he's grinding it out for you during tax season. He's basically got a pillow in his office, working 20 hours a day, looking at your numbers, going through your receipts. The receipts that you bring to him in a cardboard box all crumpled up, look like you dug them out of the dumpster. Take care of that guy. He's one of the exempt positions. He's gonna have to pay taxes on anything extra he earns. Now, he might earn quite a bit more, but he might need a good meal or perhaps an adult beverage at the end of the tax season as you're paying that little bill he gives you. So what about people like managers? The guys that are driving you most of the time. Those guys that come in about every 2 weeks and say, we got to have a meeting. And they're going to give you this beautiful PowerPoint presentation and all these fake smiles and a little bit of cockiness, saying, why didn't you do your stuff right? You come do it, dude. You come do it. Nope, they're exempt. Sorry. What about IT? High-level IT people kind of knew what they were signing up for. They're probably on salary. If you're the low guy on the totem pole and you basically have an hourly wage and you're just there to every 3 days help your boss set up his iPhones because he can't figure out how to get his email on it once again for some reason, and he's in IT. Go figure that one out. You're just a support groupie at that point. So you probably need therapy, and you deserve the tax break. So you'll be okay. So how does all this work? What is considered overtime? Well, let's just pretend that you're $40 an hour, okay? And you work sometimes over 40 hours a week, so you're getting, let's say double. You're getting $80 an hour for those hours you worked over. Well, 80 minus your original 40 leaves you 40. So that $40 an hour is considered overtime. So it's not what you would regularly get paid. It's what you get in addition to that. So that's the part that you're not going to be taxed on. Your employers are required to report this on your W-2, so hit them up if you don't see it on there. How much of this overtime is not taxable? Well, up to $12,500 a year, so it's a good little chunk. If you're married, filing jointly, it's $30,000 a year. So I guess get married, because that's more than $12,500 a piece, right? Yeah, my math ain't that great sometimes. Anyway, the phase out is $150,000 if you're single and $300,000 if you're married. So that's where it starts going away. They start not letting you take as much of a tax break. Only for married filing jointly. So if you're married filing separately, you don't qualify for this. So married filing jointly, I find, is usually the way to go. Very rarely, like less than 1% of the time that I've seen these things has married filing separately ever benefited anybody. So it begins after 12/31/2024. So that means 2025 earnings count. So they went all the way back to January 1st, 2025. That's one day after December 31st, 2024. So all of 2025, work hard, do the hustle, get your overtime in, because you're going to get a tax break from it. You're going to owe less and put more of that money in your pocket. So once again, folks, if you're making overtime, if you're working more than 40 hours a week and you're not in an exempt position, you're going to get non-taxed on $12,500 if you're single, and $30,000 if you're married filing jointly. The phase out is $150,000 a year for single, $300,000 a year for married filing jointly. You must file married filing jointly. Your employers must report this on your W-2, so be sure you check that. And that's all we got for today. Appreciate you being here. And I'm just doing what I love when I'm not playing the guitar, man. Studying taxes. See ya.